Welcome
This.
to the Cross Border Summit. Today we are joined by Mark Vickers, Executive Vice President and Head of International Logistics at Reliance Partners. Welcome so much. Welcome to the summit, Mark.
Thanks, Mary. Happy to be here. Thanks for having me.
I am excited for today. Even though like risk mitigation and cross-border insurance isn't exactly like the most exciting topic, I enjoy talking about it because it's something that is kind of those, I don't want to call it an afterthought, but it's something that everybody needs to have and everybody just kind of goes, I don't really understand it. I just know I need to have it. And that's where you like find a really strong partner and really kind of set up a plan that way. But I think that it's something that we should explore and try and make some heads or tails of, and you are the perfect person for that. Before we get too far into that, though, let's get some background on you and how you got started at Reliance.
Sure. Funny that you can say that risk management in Mexico is an afterthought when some of the largest 3PLs and shippers in the world are investing millions and millions and millions and millions of dollars in Mexico, knowing that there is a huge risk in Mexico. And I've just gone all in professionally and personally too in Mexico. And the reason behind that is when you hear Reliance Partners, you really think, okay, transportation logistics insurance. But for me personally, I'm really a logistics guy that got into insurance out of necessity. And what I mean by that is I spent about 8 years at Total Quality Logistics, uh, opened up a couple offices for them, moved some of their first loads into Mexico. And during my tenure there, I was really servicing the automotive, aerospace, food and beverage, um, electronic commodities, industries, and some of my clients, think like Whirlpool, Dana Corp, Polaris, those types of groups that are heavy in the cross-border industry with large cross-border contracts. Those guys were like, hey, Mark, you're handling our U.S. domestic expedited freight and some of our contracted lanes, but hey, you're doing some of our inbound and outbound Laredo freight. That freight actually also goes into Mexico and then it comes back and then it goes back and forth. Would you be interested in handling some of that at the rates that you're handling our domestic stuff too? And so probably not at the same rates, but would be interested in taking a look at that for you. And they're like, okay. Two of the things that would differentiate yourself as a freight broker or as a logistics service providers is get us real-time visibility in Mexico. And I'm dating myself here because this was like 12 years ago, 13, 14 years ago now. But they're like, Mark, get us real-time visibility in Mexico and get us a cargo insurance solution in Mexico for crying out loud, because we're tired of putting these theft claims or these rollovers. We're tired of trying to self-insure these and finger point on who's going to owe what when a claim occurs in Mexico. We're tired of dealing with that. So solve these two problems with us, and we'll give you all of our freight. So neither one of those were very easy to solve, but I was able to basically use MacroPoint as a real time shipment visibility partner in Mexico, and it worked to a certain extent. And then I ended up using that product quite a bit for those automotive clients in Mexico, and I ended up joining the team at MacroPoint, and that was a really cool thing to be part of because we sold MacroPoint to Descartes, which is a Toronto-based, really global trade management and TMS company. So some really cool stuff to be a part of. But I also learned during that whole process that the industry still needed that cargo insurance solution in Mexico. And while I was at MacroPoint, I was calling around to some of the biggest insurance companies and banks in the world, domestically and in London. And no one really had a clean product out there where it would provide a true all risk product that would cover the cargo for its full value, regardless of conveyance type. Something that it needed to include the transloading process. It needed to not have too many restrictions on carriers, needed to not have too many warranties that would require these Mexican carriers to follow these outrageous stipulations for the the cargo insurance to really be valid in the case of a claim. So I ended up having to have a few different insurance companies work together to put out a product that would work for the logistics industry, where logistics service providers could obtain cargo insurance on a per shipment basis and on a per client basis, per project basis, for cross border and for intra Mexico. And we got something off the ground about 8 years ago, and I didn't even have a name for it. I just had a few initial clients, which were Schneider and Coyote, which were good kind of, sorry guys, but you were our beta testers, whether you know that or not. They thought I had a room of about 40 other folks, and it was just me. And we got something off the ground that really worked, and then we paid a few big time claims on in Schneider like that, and Coyote like that. And when we paid those huge claims, word got out quickly that, hey, there's a product out there that can provide our shippers with cargo insurance in Mexico. And when groups really started to win large contracts by leveraging risk management in Mexico, which you said was something that people didn't want to talk about, when you can leverage risk management in Mexico to win big contracts, people get excited about that. And when it started to work, then we started on board the rest of the top 100 freight brokerages. I ended up calling it borderless coverage. And
Mhm.
borderless coverage wasn't just a product, but it became a larger company. And a good friend of a friend of mine named Tom Albrecht, who was at Celadon, he closed the doors at Celadon. He came on board at Reliance Partners as their CFO, and he gave me a call. He's like, Mark, we'd like to have you on board. We'd like you to lead international, and we think that our audience or our client base at Reliance Partners, who are the, all the top logistics firms in the U.S. are using Reliance Partners. And he's like, if you'd be interested in leading this for us, and he said yes. It's really been a match made in heaven, because the folks at Reliance Partners, I met them, and they're just like me. They're all logistics people, like Chad and Ronald's. I think you know them. Um, these guys started Access America. They sold it to Coyote. Coyote's sold to UPS. Since then, UPS or Coyote was then purchased by RXO. So all of these guys are logistics people that were incredibly frustrated with different insurance nuances, because trucking insurance was really written for the asset-based trucking company in mind, was not originally tailored for a freight brokerage audience. Things have just kind of, he will adjust a trucking insurance program for freight brokers. And everyone that I've come to be friends with and that are partners with me at Reliance, they all get that our job is to create products specifically for freight brokers to address pain points and to protect freight brokers. So, kind of there's my introduction. But I just want to counter your initial comments on that. Cross-border risk management is not exciting, because it is, because you can win freight from it.
Yes, I do think that an afterthought was a poor choice of words there. It's just not something that everybody thinks of when they're like, "Oh, I'm gonna start working on business. I'm gonna win volumes. I'm gonna do that." To me, the risk management part of things isn't necessarily what maybe goes through isn't the first thing that goes through a carrier sales rep's head or a sales rep's head when they are looking for new opportunities. It's kind of one of those things that it's like, okay, we got this business, and now we have to figure out this part of it. So maybe afterthought in that aspect of it, but it's definitely not an afterthought in the industry. However, those that aren't necessarily in the everyday cross-border insurance or risk mitigation part of the supply chain, it is still kind of like a hidden thing where it's like once you're in it, you know about it. But if you're not in it, you're just like, I don't know. I know we need it and it's a thing, but a lot of
Uh,
times it can get confusing to those that aren't in it every
it's
day.
so frustrating to hear that, because that's still what top 20 freight brokerages in the US say to me is, ah, what do we do? what do we do? And it's like, it's really not that difficult to figure out a, a world-class cross-border risk management strategy. And once you have that together, it's really sales cooperating with risk management and operations. And usually a salesperson is trying to go after some high value load, and risk management's telling, don't touch that, man. Don't touch that. It's too risky for us. But when you have a, a, a borderless coverage product and a borderless cross-border risk management program in place, it really forces risk management and sales to work better together to win freight, and it allows a company to confidently take on very risky deals. For example, we'll work with, say, a Texas-based freight broker who's moving who has serviced Samsung domestically for years, but they've been getting opportunities to handle this Guadalajara to San Antonio or Alabama Samsung freight. And they're like, yeah, man, we're not touching that. They should absolutely be going at that with confidence, and sales folks should be bringing those types of opportunities to their CEO's desk to say, hey, we should be expanding rapidly. And here's why. And you can do that with through our program.
So I guess when it comes to those opportunities for those who are like, "Hey, don't touch that," or like, "We need," or but when it comes to opportunities where it's like, "Don't touch that. That's too high value. That's too risky." But then also at the other side, you're like, "Well, how do we know that our risk management like or works? Like, how do we know that we have something that's good in place if you're not?" I don't want to say testing it, but not proving it.
Right.
How do you strike that balance between intentionally doing something that's going to stress your risk management to potentially a breaking point or to the edge, but then also still taking the risks and winning that additional business?
Sure. So the risk managers just they need facts before they can move. So they're not going to take on risk unless they know the facts. So one of the big facts is cargo insurance in the US and Canada dramatically is different from Mexico. I always refer to Mexico as almost the wild south, and it still is. Like Kenya, for example. Kenya is everybody total pretty much third world country. Kenya just mandated that all of their carriers have $100,000 in motor truck cargo. If Kenya can do it, you'd think Mexico can do something like that, which would standardize cargo liability in Mexico. And it's just not the case. No Mexico carriers have really any level of cargo insurance at all. And that should scare the heck out of a US shipper. It should scare the heck out of any cross-border logistics service provider. And they should be vetting the heck out of their Mexican carriers. And what the law is it's actually changed. There used to be some absurd um, re- cargo liability requirement in Mexico that was really based off of the minimum wage in Mexico, but it's changed, and there's a new number which is called the UMA. So UMA could be a new term that people will learn today, but it's the unit of measurement and actualization. That's the literal translation. And it's the current daily value of one UMA is 114 pesos. So that number is multiplied by 15. So 114 times 15 is 1,710 pesos per ton of cargo. So that's kind of hard just to do in your head, but it's approximately $93 per ton. So on a shipment that is, say, a typical cross-border shipment is 42,000 pounds. So
Mhm.
the carrier is only on the hook for $1,953. So that shipment could be valued at $100,000. The shipment could be valued at $1,000,000, but that carrier is only legally liable for under $2,000 on that shipment. So if you're looking to move high value freight across the border and you're only relying on that cargo liability required by law in Mexico, you're insane. You shouldn't do it. You shouldn't do it at all. You don't have coverage, and that carrier is probably not going to have even that minimal coverage because nobody follows through with it. So what these groups need are all risk cross border cargo insurance, and the And what's great about it now is you don't have to buy a massive annual policy. You're able to purchase this on a per client basis. And why that's important is instead of dropping $3 million on a blanket Mexico cargo policy, you can purchase the coverage just for Nestle or just for Procter and Gamble or just for Kimberly Clark. And then whatever that the end amount is, you don't tie that into your line haul, but clearly tell your shipper, hey, we're confident about our cross-border risk management strategy. We don't want you to self-insure in Mexico because if you do, you're insane because your deductible is probably $100,000. Your freight's valued at $100,000. You don't have coverage in Mexico. So what you need is, hey, we're going to do a good job moving your freight. Here's our line haul rate. We're confident about our cross-border risk management strategy. Here's a separate line item for insurance. We're going to charge you for that insurance. And that shipper, if they know what they're doing and you call out their deductible, some light bulbs should go off to that shipper. And they should be excited to work with you as a wise cross-border 3PL or motor carrier or whoever you are. But the groups that are proactively offering coverage in Mexico and providing reasonable line haul rates are the ones that are winning the freight. And a partnership between carriers, brokers, and shippers leveraging a borderless coverage product, it's a different world than it was 10 years ago. And when that risk management strategy is in place, they're all seeing less claims because they're all working together better together. They're forced to. And then when they implement an insurance product together for cross-border, then they're like, you know what? We can even do better things. We can start layering on in-cab tracking, on-trailer tracking, and in-pallet tracking. And everyone starts to be more open about load values and about what the commodities are. There's no that's a good discussion for everyone to be having. It's good business to be talking about what's actually being moved and really quickly addressing the line haul and moving on to the next thing. So, how does that answer your question?
I think that's a pretty comprehensive answer. It's kind of taking a little bit of everything, but really stepping back to look at the bigger picture and say it's not necessarily just protecting yourself from the load and protecting and just focusing on how it affects you. It's really truly coming in as a partner for everyone and with everyone on kind of how to be successful and make sure that you're not just having like, you're not just saying like, "Oh, well, I'm only in it for myself." It's like, "No, we're gonna work together." It's truly gonna be a partnership between a bunch of organizations, which is fantastic because that's kind of how it should be, especially if there is no standard of coverage down there. So you have to kind of more or less create your own.
It's got to be partnership is the word for cross-border because you're not just moving freight in the U.S. And like in the cross-border environment, most shipments are transloaded. And there's a customs broker involved too. So a typical shipment moving from St. Louis to Monterey, you're going to have a U.S. carrier that brings it to the border. Most likely going to be transloaded, so it's placed in a warehouse. There's a U.S. customs broker, and then the shipment is checked, and then shipment's brought across the border through a drayage partner, taken to a Mexican warehouse, checked again, and then a Mexican carrier usually brings it to the final destination. Sometimes there's 2 or 3 involved. So there's at least 5 hands in the pot when you're moving cross-border freight. So you've got to have trusted, pre-vetted partners that have dedicated assets allocated to contracts. It's not as much spot freight as you're typically going to see, like you'll see in the United States. A lot more contract rates. So there's got to be a lot more trust built. And the Spanish word for trust is confianza. And there's a new company that you'll be able to see coming out. There's a lot of beta testers of the product Confianza that's coming out. But what that is, it is Pepsi hired a law firm in Mexico to vet all of their carrier partners against 14 different criteria. And what Pepsi feels is we don't want to use these carriers unless they've got that confianza stamp of approval. And that group is starting to scale that out to large U.S. freight brokers. There's about 10 freight brokers that are piloting this right now. And I think that that's going to really kind of open up the floodgates for U.S. companies to confidently find partners in Mexico at reasonable rates. Who cares about the rates? I mean, of course, rates matter, but it's about finding world-class partners in Mexico and reasoning behind why you should trust Mexico carriers. And on the flip side, it's Mexico carriers won't do business with U.S. companies unless they're financially sound and unless they will meet with them in person and get hammered, having some tequilas, and being available over the phone and paying their bills on time. So unless the Mexican carrier knows that, then they're probably not going to allocate 100, 200, 300 trucks to a big contract. So trust, like you said, partnership, like you said, is hugely important in cross border. It's a lot different than moving freight in the U.S.
Yeah, it's definitely more of the you have to get a seal of approval from someone else to be like, "Oh, no, they're good for it," or like, "Nah, I trust this guy, he's good." It's definitely more of, like you said, it's kind of the wild south, if you will. It's just a different way of doing business, and that's the beautiful thing about working with other countries and other cultures is that you get to see kind of how things work in business just done differently. All right. So that being said, we are pretty much out of time today for our summit. So if anyone has any questions on kind of how to develop a good risk mitigation strategy, where can they find you outside the summit?
Well, you can reach me by email or just call my cell phone. You can just go into the Reliance Partners site. Within Reliance, there's a borderless coverage section that outlines all of the different trucking and logistics offerings that we provide. But two things to note to the audience is prices for things are going higher. I just remembered I had my avocado shirt on. If you went to the grocery store 5 months ago before Trump was in office, an avocado was $1. It's not $2. Look at your insurance. Do you have the proper levels of cargo insurance? And the bad guys are getting smarter. There's products out there like Highway um, in the U.S. that are vetting carriers to make sure that they're legitimate. In Mexico, we're still seeing the armed robberies and hijackings that are occurring. Drivers are getting beat up. Um, I I'm going to predict that in the very near term that the bad guys in Mexico are going to become a lot more like the bad guys in the U.S., where they are stealing MC numbers and double brokering loads out. So if you're moving cross border freight, you got to get ahead of that. We can help you make that happen.
Awesome. Thank you so much for joining us today. And everybody stay tuned for the rest of the summit. We have some great content coming your way.